Thanks so much for tuning into this conversation with, you can call him the indomitable, you can call him the frank Samir Arora, you can call him the outspoken Samir Arora, what have you. But he is with us to talk about the budget and the market sentiment around. Samir, it's so good having you. Thanks for joining us.
Thank you very much. Thank you.
So what did you make of the budget?
So I forgot that there's a budget. After what all has happened after the budget, I forgotten that we actually had a budget also. But when we were looking at the budget, it was very good. And then, of course, it got dominated by other things. But budget was very good in terms of 2-3 big picture things that you want. One is do no harm, number one, which would be related to anything. And in our case, related to, say, capital gains, tax, this, that. Second is in general fiscal deficit, broadly looking that you are trying to control. Now, somebody was asking me that, does it mean they will reach or achieve these numbers? I said, first is to put a target and pressure on yourself to publicly say this target. And so that was good. And then a little bit that you are, spending on whatever be the deficit, that you are not spending as much on P&L items, as much on a Capex kind of an item. Now, I was reading, somebody said, no, it's not 30%, it's actually 20% because they have counted this and that. Up the number is what it is, you count it as you want. And 20%, if they had said also, that would have looked a very impressive number. So if you cleaned it up and you come to 20, okay. And then on the income tax and all, nothing much was expected, but a little bit has to be done and was done. And more than that, I think this year the middle class or the lower middle class will benefit from the spending done by the political parties on elections. 3-4 candidates or more, I hope, in each constituency spending crores on winning. So that also will go to the same audience in a big picture sense. So, first thing is there was nothing much was expected, and it was definitely on every line better than expected.
So this is a simple thing to do, Samir. 2 months, 3 months before the budget, there is some chatter about long term. Then you don't bring it, and then the budget is a good budget from a capital market
actually, this time I thought so. But if you see the 30 days before, I was already saying that there will be no capital gains tax this time. So this time that wasn't that big a relief. I mean, it would have been a negative if it had come. Because this time the hype was not created and it's about to happen. I don't think that happened.
Okay.
So we will not give that simple an answer that therefore the budget is good. I think it was actually good.
Acha, okay.
I mean,
by the way,
relatively good, yes.
But interestingly, Samir, this time around, I remember in Feb or March 2022, there was a newspaper article which said that the budget in 2023 will tinker with the long-term capital gains. So I was like amazed, but be that as it may. Okay, so Samir, then therefore, just one small question on the budget and then the market-related talk as well. But the question is, it's 3 years on a trot now that there has been this focus on Capex. Whatever the number we may quibble, but 3 years now. Does that therefore make manufacturing an inevitable part of portfolios, so to say?
It hasn't for us. But in general, the thing is that if they are spending, they are spending on infra, not so much on Capex, but they are just making it easier for the whole country to provide a decent alternative, if not a complete head-to-head alternative, but a +1 alternative in terms of, if there are better roads, the logistics can be easier. If there is GST, you can make bigger warehouses and all that. So that part is happening. But we still haven't figured out exactly what stock to buy and feel that this is it. So we say, we have the banks and we have general economically sensitive sector, but we are not literally able to buy any one stock. Also, I feel that some of it may not be related so much to capital. For example, if you give PLI scheme and all these guys who are putting in, if you see the amounts they put in, it's like 100 crores, 200 crores. If you see Dixon type guys, they will put 200 crores, I think it's a big, or 500. So it is more to do with job creation. That you are creating lower jobs in terms of 20,000-30,000 rupees. Maybe you're creating more jobs for women in a safe environment, going to an organized setup. That also is valuable. Yeah. But every second is not that what stock I will buy. So we haven't bought any actually.
Got it. And one last question on this is on insurance. I mean, this whole great Indian under-penetrated insurance story, has it hit a major roadblock by virtue of what's happened in the last 2 budgets?
So we had one stock. I say had because right now we may not have, but in the morning we had.
Okay.
So the point is, these stocks are down 10-12% month to date, year to date,
Year to
month.
date.
We can see many stocks which we own also down more than 10%. And some new stocks which are down more than 10%. One of them which I like a lot is around 35%. I don't own it, but I want to buy more. So those stocks you can buy and move on in life, because these things take a year, 2 years to make up. It's not just that the stock price falls, then everybody has to change in a sense, their business model a little bit, their selling model, their incentivization model. We have no energy because we are a limited capital company. We want to maximize to the next. So, yes, it has affected. Somebody can say more affected, less affected, affected already shown in the stock price. Doesn't matter, because there are many more stocks that are not many more, but a few more stocks that are down more than 10%, and we don't know why they are down 10% or more.
Got it. Well, you mentioned that what happened not in the budget, but post the budget was actually of keen interest. Now, it's a saga for a bunch of investors out there, Samir. What's your sense here? Because the pressure on the Adani Group stocks is unrelenting, so to say.
Correct. But I think little bit is their mistake also in trying to do a deal which is visibly wrong, in the sense that you don't do a secondary sale a new primary sale at a price so much higher than the price at which somebody could buy. So which means any genuine regular guy would back off. Only people who are complete believers or friends. Now for them also, you don't want to have that bigger disadvantage, but more than that, you should make it wider. So they could have, I don't know exactly all the rules, but they should have reduced the price by 10% on Monday. It would have come in line. Any buyer who's otherwise considering buying would say, now I have been rewarded for this episode, this event. And then they would have come in and made it more wider or whatever in terms of the thing. So now that part is over. But I don't believe one bit that there is a debt issue and a rollover issue and all that kind of stuff. I don't believe that, because we can visibly see the assets if needed. You can sell one asset, you can sell two assets and move on in life. I don't think any of that will be needed. But right now, it's a spiral kind of a thing which hopefully ends in 1 or 2 days. But I don't think it's causing this up.
So this pressure.
So we bought Ambuja on Monday.
Oh, okay.
It had fallen some 28-30% year to date or whatever. Of course, it fell another 10-15% yesterday. But I can't imagine what the issue is. It's a standalone company. It has been bought at a higher price than today, at least. It was bought around the same price at which I bought. When it was bought, there were many other bidders. There is clear value added from the Adani Group in terms of coal or power or logistics, which is done by the Adani other company, port or enterprise and all. And all those shares are lying, in a sense, I don't know exactly how to work, but basically it's lying in one group with 5-6 financiers who have taken a non-disposal undertaking. And anyway, what do you expect? If those guys own the whole 67%, are they going to go to the screen and quietly sell 1.2%? So it is understood that those shares are locked. Either you do well, and God forbid, okay, then you give it to the next guy after 1 year, 6 months, 9 months. But everybody knows that there is a separate, cleaner, as in unencumbered with other things, asset. So give it to the next guy. Sorry, it didn't work. And you will get holding cost plus that. And because the price a few days ago was 500 something, which means in this stock, in which there are many portfolio investors, fund managers, mutual funds. So they all believed that, yes, this company is easy to change, or not change, improve, by having the other elements brought in from other companies. So what is the issue? I don't understand. Same thing with actually many other. I can't imagine that suddenly there is an issue on rollover. There is no bonds that are due this year. In fact, I'm thinking of buying personally some of the bonds of one of the other companies, which is maturing in 24, and you can get basically 18-19% in 1 year. If everything goes right, which I think is 100% that. But of course, from their side, they will have to slow down a little bit and explain. So that's okay. Nobody's saying that every stock price is right.
Of course.
So actually, it's good in some sense that they will, not grow wildly and then they will explain and all that. So I don't think it's a larger issue. And even for them, that issue is mostly over. Maybe it brings a little bit more, less aggression, which makes it helps.
Okay. And therefore, this whole fear around banking stocks having an issue, etc., you believe it's overdone?
We think that there is no issue, but that is our bet. And that is
sure, of course.
affecting our stock, it is State Bank more than others. But yeah, I don't think so right now that there is any issue. Because, these are assets that broadly everybody agrees were good. Some people like us and many others may have disagreed what should be the PE of the energy company or the power company or something. But that's the issue. Nobody was saying that the asset itself is not good or not implemented or whatever, running well. So therefore, the actual thing is okay. Now the price has fallen, but it doesn't threaten the lender, I think.
Got it. And just one last question from this perspective on the market sentiment, and then I'll have a couple of others, but purely from this impact on the market sentiment, you think short-lived, or do you think it could linger a bit? Because the last 7 days have been all about this.
Totally short-lived.
Totally short-lived.
Because it needs 1 or 2 days of level, and then people will in fact be covering their shorts maybe or whatever if they have in. Because only I think one company with future, I think, right? Adani Enterprise. So overall, I think shortly. Another thing is people talk about, people are unhappy with India for this reason, that reason. And then where are they taking this money to China? Oh, what great. I mean, that's storytelling. It's all price. If the prices are okay, everything is okay. And I think plus minus a few days, it'll be okay. I think they have to come out properly and explain if they want again, although they have. But you can again say, okay, ask me any question on my next year's debt repayment or something, and then on the side show there are 10 assets I can sell in 10 seconds, whatever. So in theory, suppose you wanted to sell an airport, how many minutes do you think it'll take?
Yeah.
Nothing. If there was a clearances and all, security. So those things are so easy. I'm not saying they will ever need any of that.
Got it.
How can it be that these things, on day one, we are panicking that something may go wrong on maybe the year 30 repayment, I don't know, but broadly first 5, 10, 3, 5, 7 years, they have enough things in case needed.
Got it. So Samir, budget did nothing wrong. This Adani group led sentiment issues short-lived as well. Am I to understand Samir Arora is, now that the 7-8% correction has happened, I know you don't look at short term, but I'm just saying, are you largely constructive on equities?
I am totally bullish because my logic was prior to this also that China is doing well, that US is doing well. Okay, you want us to underperform, okay, for some time let us underperform. Why are we negative? Why? Okay, put money in China. Why are you taking out money to put into China? You put new money if you so desire and let us live in peace. So that I don't think is changing so fast. That these things don't happen that we are going to be down and the rest of the world is up. And the rest of the world is going to be flat to up only. And if this issue gets resolved, then every unwinding of this also has to happen in terms of relief, in terms of people who will be holding back, and some actual buying of the obvious 1 or 2 very visibly different assets in the group. So I am fully bullish. Our net is also high. Our long only is 100% invested. We had 2-3%. We bought this Ambuja. We have nothing left.
Wow. Okay. What is there something that could, if that transpires, might worry you? Maybe a Western slowdown more than anticipated?
No. It could be that something is more than I know. I don't think there is. So that would be a negative in some sense. But broadly speaking, the US, I don't think that the rally needs to be this strong. I think it is a relief rally. The reason I say that is that they are themselves saying that this 5% time rate, which is now 4.5, 4.75, will remain higher for longer, at least till the end of the year. Even yesterday, he said. So normally the rally was associated with a cut in rates or injection of liquidity in a panic mode, which is why this line came up, don't fight the Fed. Now, the fact that it's already up 9-10%, NASDAQ is up, I would think that it is a relief rally. Doesn't mean it has to fall. It means that now you are a very moderate this thing while you wait for the last quarter to cut. I don't think that you can go up another 10%. That would make no sense in the sense that that would mean that doesn't matter the level of anything, just the fact that it stopped increasing is enough. But the fact that you land up at 5-6% actually doesn't matter. That means interest rate doesn't matter.
The change
only
matters.
the growth of that interest rate or whatever, increase of that interest. How can that be conceptually? Because 5% is otherwise a big number, and if that is 5, you can easily, I guess, in US put in regular companies at 7-8%. So that's a bad return in that market.
Does that tie RBI's hands, even if India inflation were to come off a little bit, if the US Fed doesn't move?
No, so Fed and I don't think both of us are moving down.
Both of us are moving.
In 9 months. Yeah, they're not moving.
Okay. Last couple of questions, Samir. One is, so aside of what happens to individual numbers, there is this big factor of what the market starts thinking about when it comes to the political outcome in May. Do you think that takes center stage sometime during this year, or is it next calendar?
No, that is being more or less taken for granted, and I don't know what, I mean, if any event happens, some story, but otherwise I don't think that today, of course, again, the foreign investor will be told on the last day that there is political stability and one more term. Everybody in India is already assuming so.
Okay.
Then I don't think anybody is worrying about that right now. But it'll be used as a positive bullet point when needed. Today's too early to use it.
Of course. Yeah. Okay. So you don't think that's a factor at all?
It could be a factor only in a negative sense.
Sure.
And right now there doesn't seem to be any logic why that should happen. So it's
got it. Last thing, Samir, and that is, so the budget delivered on the fiscal part, and there's some people quibbling about whether it should be slightly more, slightly here, slightly there. You think on the macros, India macros, is there a cause for worry at all? Or
no, actually, this time the numbers also look very real. If you see the GDP growth in nominal terms, or because of that, what is the tax collection growth, which is they've taken, I think, 1.1x of the GDP growth.
Yes.
So that looks very reasonable that you'll grow 11.5%, 12% the tax collection and 10.5% GDP growth. And then if you see the other headline, I mean, the other big picture numbers that I see, what is the divestment number? Does it look wild? All those numbers don't look wild. They look 50,000-60,000 crore. There doesn't look any one-off I will get from selling this or that. So plus minus, it looks okay. It doesn't look so bad in any one line which would make it feel that the whole thing has to be questioned.
Got it. Samir, take a moment to thank you for joining in today.
Thank you very much.
Giving us your thoughts. Really appreciate your time.
Thank you.
And viewers, thanks for tuning in.